To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ. Welcome back to Civilization. Looks like you're back at the home studio.
Back in the home studio, happy as ever. Hi.
That's good. That's good. I feel like last week's discussion, we were talking about all this drama happening in the banking sector. This week, it seems like we've brushed that off. Like the markets are staying resilient, and I'm curious as to what's going on.
You know, your guess is as good as mine, but the scoop is sure enough. Let's take a look. Let's jump right into the charts. Take a look at the S&P 500 index. In fact, I like to determine whether or not we found a short-term reversal just with a simple moving average crossing. I use the 3 and the 5-day EMA, and I had completely thought that last week we were coming down right here for this crossing across this purple line here. That would be the 3-day crossing the 5-day. And instead, we bounced off and we're continuing higher, which, if you look at it from our retracement analysis perspective, if I put my ruler along the last time that we had any sort of movement, we're over 100% of our last retracement. What that means is that we're seeing a mid to long duration trend change. So I already recalibrated all of our drawings here. And it looks like we're on a little bit of an up move for the short term here. This is the first kind of short term, we call it a range expansion move in a new direction.
Yeah, and I'm not sure if there was any driver for that this week, but I know that today we got some inflation numbers, which is helping the case. We had revised GDP. Was that something that was newsworthy?
Yeah, I mean, this is the final. So we talked about this about a month ago. The GDP first gets released like right away the month after the quarter is over, and they call that the advanced preview. And then after the advanced preview, a month later, the statisticians and all those bean counters come back and they come up with the preliminary GDP. And then the 2 or 3 months later, they come back with the final GDP. So this is the final GDP numbers. And as you can see here, the GDP numbers actually were a little bit less than what they had said in the preliminary, which, it might seem to some people like, oh, well, that would be bad news that the GDP is down. But actually, when you think about, from a inflation and, hey, we're trying to cool off our economy perspective, that actually looks good. And if you look at this other number, the personal consumption expenditures number, I mean, it dropped significantly from the preliminary. That's down at 1%. I almost feel like, I don't know if you remember, Sip, about 2 weeks ago, we talked about this seasonal adjustability and how statisticians like to adjust the numbers based on, past experiences. I feel like that they've done that this time. Between the preliminary and the final numbers, they've adjusted their seasonal adjustability and kind of calibrated it based on kind of the warmer climate and also the fact that we're coming out of the pandemic. And this is more representative of what's happening, which is showing that, hey, man, the Fed tactics from last year are working. In fact, you mentioned the personal income and outlay numbers, right?
Yeah, well, I think you need to update your screen share because we're only getting the chart right now. I'm not seeing the actual the numbers.
Oh my goodness. Okay, let me go ahead and fix that up really quick. Sorry about that. Let's see if I can recalibrate us here. Here we go.
All right.
All right.
There we go.
Yeah. So what we were looking at with the GDP numbers is that the final number here came back at 2.6% instead of 2.7%, which is what the preliminary numbers, just a percent. But when you think about the trillions of dollars that make up the US GDP, that's actually a big number. And then this is the number I was really kind of harping on, which was the expenditures dropping from 1.4% increase to a 1% increase. And then if we take a look at those personal income and expenditure numbers, this is that the personal income and outlay numbers. This is the numbers that the Fed really puts a lot of emphasis on when they're making their policy decisions. And if you take a look at it, income is down. It's where we expected it, but last month it was at a 0.6% increase. This month only a 0.3% increase. Month to month, you've got 0.2. That's what was expected. But now when you start to get to the core, which is core personal consumption expenditures price index, you can see that this is starting to drop. And so all of this bad news and growth is good news when the goal of the Federal Reserve is to slow the economy.
Yeah, and I feel like this is what's driving the market today, right? Is that things are cooling off, things are slowing down. So the Fed isn't going to have to raise rates as much, which should kind of chill the financial and the banking sector out a little bit.
I actually think that investors are not, especially market investors, they're not dummies, right? And so let's turn our attention to the less broadcasted in the mainstream media tool that the Fed uses. And we here at Trading Trainer, we like to look at this a lot. So the Fed was on this tirade of selling off their bonds. And then as soon as the banking thing, where banks started to fail, we pointed out last week that the Fed started to buy back bonds. In fact, they bought back almost a third of the bonds that they sold off over the last couple of years. And they even bought back a bunch more the week after, right? And so I think the people who are involved in the markets are seeing this. This right here, this bond buying directly affects the long-term interest rate on bonds, which is what mortgages are tuned to. And also, these are the bonds that these smaller banks are invested in. So if the Fed starts buying them, it basically means that the value of them is now going to be held up a little bit stronger. That was the problem, wasn't it? The problem with those small banks was that these bonds they purchased, which they hoped would stay, they would be a good investment for their depositors' money. These bonds started to decay in value because the Fed was selling off. It's also a function of interest rates, but it's mainly that the Fed was selling these bonds into the market, making bonds basically lose their value. All of a sudden, you're flooding the market. When there's a lot of selling, prices go down. And so the Fed was doing this. These bonds that these banks were holding were losing value. And then when depositors got hint that there might be some sort of weakness in a bank, with the click of their buttons, they move their money to more secure banks like a Chase or a Capital One or a Citigroup. Move that money over to those banks. And when these, all of a sudden these smaller banks needed to make good on, sending their depositors money over to the bigger banks, they had to sell these bonds at a loss. So the Fed has come in and propped that up by basically starting their secret bond buying. It's not secret, but it's not as publicized as their interest rate hikes. And I think investors who are paying attention to this, they see that the Fed has got their back, right? The Fed is in there, saying we're going to make sure that we do what we have to do. And so this gives people a lot of comfort. They say, okay, the Fed knows how to manipulate this in order to make sure that these banks don't fail. We can feel more comfortable doing the investing that we're doing. And I think this might be, and I'm speculating like everybody is, but I think this crazy amount of bond buying that the Fed did in just the last couple of weeks. I mean, as I zoom out here, this is 6 months, this is year to date, 1 year. You can see they totally like almost erased all the selling activity, and they really need to do that selling, but man, they come in when there's an emergency, like Cowboys with their 6 shooters going, don't they?
Yeah, two observations for me is one, I'm surprised this isn't broadcasted more. This actual chart that we're looking at because it has such an impact on the markets. And then secondly, you use the word prop. The Fed is propping up the market. And so I feel like that's what's happening this week. That's what's happening following this financial news is the Fed and the US financial system has so much money that they just have to tweak a few things and it's going to keep the market propped up until we get some good news like a decline in inflation. And then it's like the market's like, oh, okay, well, we're kind of back on track. But the reality is there's a lot of propping taking place. So like what's really happening in the market? What's really, because as a everyday Joe, I mean, when I'm hearing these banks failing, I'm concerned, right? I can only imagine that everyday folks and investors are also concerned with these things. So like when we see the market going up, it's like, okay, is it really okay or is it bad? Like which one is it? But I feel like it's financial fabrication, but isn't that the essence of our US financial system, like going back, 100 plus years? Haven't we been doing? Well, I think the Fed has only been around for like 100 years, but that's what they do.
Not even 1950s, so more like 70 years. But the scoop is yeah, I mean, and this tool that they're using, buying and selling bonds in mass, really they've only been doing for the last 15 years. They started this in the 2008 in order to bail out the whole recession from 2008, and they never stopped. And so yeah, because when the Fed does this bond buying, the money that they use, they're the only person who can do this, or the only entity that can do this, but the money they use in order to buy these bonds is funny money. It's IOUs. So yeah, in the short term, they've created some stability. In the long term, they're using this tool and they're introducing money into the liquidity into the system that doesn't really exist. So, some of the news on the headlines is, for instance, Russia has decided that they're not going to peg their ruble anymore to the dollar or use, US dollars. They're going to use Chinese yuan. So in the long term, does this actually, worry people if the yuan all of a sudden becomes the currency of choice instead of the US dollar? That's going to not let the Fed have as much, the Fed does this because the US dollar is the currency of choice around the world right now. But hey, man, there's somebody knocking on the door.
Yeah,
So you
but
gotta
let's
be
be
careful.
honest. Do people really trust the Chinese dollar, the Chinese yuan as the stable currency, given how they run their country, their regime, right? I mean, I certainly wouldn't. I think it's just these global powers trying to come together to fight the United States. But that was the big news. The other big news this week was the depegging and using different currency to price commodities, or it was just oil, or it was some other things.
It's basically the way that the Russia's going to be paying some of its bills.
All right. Well,
anyway,
for us, fortunately, we're not really directional, right? We're not trying to pick whether the market's going up or down. There's been a lot of drama going on in the bond market. We don't really touch on bonds much, but they do have an impact on the overall market. And so maybe we want to take a look at the VIX, because that is another tool that we do. Well, I see you pulled up a chart. Maybe we want to run through that real quick.
Well, this is just the S&P 500 again, zoomed out. And so even though we're getting this little move up, we've had little moves up in the last year or so. And in the longer duration of things, just to emphasize what you said, we're just in this big sideways choppy directional move here. And so unless you're using some sort of strategy to profit on this mess, directional trading and putting your money into a bank account right now and buying and holding, unless it's a particular symbol that has strength from a business perspective, man, it doesn't make sense to just buy and hold. Like, for instance, the S&P 500. If you started to buy and hold the S&P 500 200 years ago, I mean, 2 years ago, you'd be nowhere in the last 2 years.
Yeah, in the last 2 years is we're following this pandemic. We don't know what's going on. Some companies are making money, some companies aren't making money. The financial system is exploding, but we're inflation starting to come down. So it is just kind of teetering in that midpoint area.
Yeah. Yeah. So, looking for ways to profit on that is what I would be doing right now. You mentioned the VIX, along with that little, this just kind of substantiates that idea that I've got, this theory I've got. The VIX is not only has it dropped down from where it was 2 weeks ago when people were afraid small banks were going to fail, it's actually dropped down and now we're hovering below this mean line, telling us that all of a sudden investors are calm. They're trusting, right? That's what this is. This means that they're confident in the direction of the move. So this little upturn along with this confidence, I mean, more power to them. But I think you're right. I think you're absolutely right when you say I'm on edge, and should something happen, should there be any kind of glimpse of news that something will happen, I'm going to make big moves. And I think that that's what we're seeing here. We're seeing like a temporary confidence. We're seeing a temporary kind of like, I feel okay with the market, but any sort of like little tinder you throw into that box and boom, I think that you're going to see a huge sell-off.
Yeah, and we here at Trading Trainer are going to be positioned and looking for opportunities to take advantage of that.
Always.
And so what we want to do is give everyone some insight into our daily workshop, right? So AJ's put together an amazing daily workshop where he breaks down the option strategies used to take advantage of the market that we're in now. And primarily this is used with what's called premium selling options. And so later on in the show, we're going to go through a few examples. But in the meantime, if you haven't checked out the webinar, we're going to go ahead and throw a link into the chat so you can go and check it out. We're going to take a little bit of a break, and then we're going to go through AJ's pick of the week, and then we're going to look at some of the user questions from the week. And as always, we are broadcasting live. So if you do have a question, feel free to drop it into the chat and we'll try and get through it. Otherwise, we'll be back in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right.
That commercial never gets old.
It's pretty smooth. Before we get into your pick of the week for this week, I feel like we should review last week's pick or discussion, because I know all week I was looking for an opportunity to get into Wendy's, and I really liked the discussion that we had. And I was just, maybe we should review if there's still an opportunity to get in. But Wendy's was a great name that we covered last week. What are your thoughts this week from what we discussed?
If you followed our recommendation and on Monday or Tuesday or one of these days you jumped in, you did good. I think we're getting to the point. So you can see here, I've outlined the center of the channel. It's between about $21.50 and $22 if you want to use round numbers. And we're up here as of today at about 21, just a little bit hair lower than $21.75. I think you've missed your opportunity if you didn't take it earlier in the week, for buying your initial covering position. But you're getting, it's queuing up well for us to sell premium against it. And that brings up a question that a lot of people have been asking me, Sip, and that is, with there being some calm and confidence in the markets, does it make sense to still sell premium? And the answer to that question is absolutely, because premium is affected not just by whether there's confidence or fear in the market, but also just by time passing by. And so that time, that clock that works on options going to their expiration date, especially when an option is near term, like 3 to 5 weeks to expiration, that clock, it goes at a normal speed, but each day that goes by exponentially affects the value of the option. In other words, premium always expires at 0. So no matter what you sell it for, if you can sell it and let it go to expiration, it's always going. So whatever value it's going for, you're going to make money. So their premium selling never goes out of vogue. It just happens to be a little bit more in vogue when people are afraid, but it's always popular.
And last week on that topic, we discussed the selling of insurance, right? That's kind of what we're doing, and that because the fear last week was so high that those premium insurance contracts were more expensive. Can we assume that because the market is settling down a little bit, that those premium prices have come down since maybe last week on some of the options?
They have, and we're seeing it. But like I said, if you hold the insurance to expiration, it becomes worthless. So whether you're getting $100 or $120 for these option contracts, it's still 100 versus 120. It still is money that you can make in the account. In other words, the fear versus confidence movement is like taking $100 contract and moving it up to 110 or moving it down to 90. You still make that on average $100. It's the time passing by when you optimize it for what we call in the nerd world theta decay, that really is the profiter. So like I said, premium selling is always in vogue.
And if you're an investor and you're not utilizing premium selling, it is a great tool for when we do have another dramatic flare of some bank that doesn't know how to manage its risk, and the VIX spikes up. Then you won't be getting the 100, you'll be getting the 120. And so that's the value of investing and using these options. Now, what I always like about the premium selling strategy is you could still hold the names that you believe in long term, right? You can still use the tool in your portfolio for companies that you think will, be worth X amount in 2 or 3 years, right?
Absolutely. It's a great way to collect premiums and buy, those symbols you want to have in your portfolio, buy them at the price that you're willing to pay.
All right.
Much better than a limit buy order. Much better than a limit buy order.
Yeah, for me, whenever I explain this to people, it's always trying to explain that this is a tool, right? People, conventionalism is you buy stocks, you sell stocks, right? But then there's all these tools, and I'm always like, hey, have you heard of options, premium selling? Are you utilizing it? And if the answer is no, then we've got an education opportunity, right?
Yeah.
And an invitation to join the YouTube channel, to join the show, to hit that like, that comment, or that subscribe button so you can get these names. Let's dive right into your pick of the week, because I do think it's an interesting name, right? We've been talking about the banking sector the past couple of weeks, and we did discuss Citigroup as a name that kind of weathered the storm. And so your pick of the week this week is Wells Fargo. Is that another contender that has weathered the storm fairly well in this recent?
So I'm kind of being the devil's, so Wells Fargo has had all their own little issues over the last months and years. And I was looking at the chart from a technical. They are one of those banks that's, put under extra scrutiny. They're very large. And so that's why they have been in the news over the last years, because some of their practices, especially around mortgages, have been unusual. But when you look at the actual company, man, they always produce earnings. We're talking about pretty healthy earnings for every dollar invested in their company, and they give back to their investors quite handsomely, right? You buy a $38 stock, you're going to get, something like, what is it, 30 cents times 4, $1.20 every year. I mean, within 30 years, I mean, that's a pretty healthy percentage given even some of the bond rates that are out there now. So, all to say, this is a solid company that's not going anywhere. And I wonder, I'm playing devil's advocate, but I'm getting a signal right now. If I go ahead and pull up my, I'm just using the Fast MACD made popular by the MACD folks over there. Let's try that one more time. Load study, get study set. I might have just deleted it, but that's okay. We'll put this guy here. Oh, that's what I'm doing. Hold on one second, guys. Load study set. And let's put this guy, boop. No, load study set. There we go. Just took a second. So if I take a look over here, I've been getting signals that we might have been finding a bottom, and it looks like it is from other perspectives as well. And so looking at this symbol, I'm questioning, does it make sense for us to set up the initial covering position? I think I might dabble in this. Now, I have a limit up to a certain percentage of my portfolio that I can put into this trade. I might not max out that limit. I might go ahead and dial that back a little bit based on just it being Wells Fargo Bank. But I really think that there's an opportunity here, and I wanted to feature it for the crew. The folks who watch the YouTube channel, the folks who watch the Facebook Live, the Twitter Live. I wanted to say, I think that there's an opportunity here, and I wanted to point it out. This is for getting into the initial covering position. So we're either going to be buying the stock, so you want to buy it in lots of 100, or we're going to go ahead and buy the back month substitute option. And I would say probably going all the way out to the June 2024, not June. Let's do January 2024 option, and let's go pretty deep in the money. I'm looking here at my extrinsic value versus my mark. Let's look at the $20 strike price, January 2024. So if you're going to do a substitute option, I would use that option. And I'm thinking about getting into some of this. And again, I'm going to use position sizing that dials it back from my max, max possible position size. But I think there's something here, and I wanted to feature it for everybody.
And when you're looking at that option, you're looking to buy a put?
No, at this point, I'd be buying a call that's so deep in the money, so far out in time, that it actually behaves like the stock. So when the stock goes up $1, so does this call. And so I'm looking at this call, but it would be for about half the price. So this call is currently going for $18.15 versus the stock that's going for $37.50. So this would be, Sip, our initial covering position. This is what would allow us to sell premium in the future. So this is a good time to set that up, just like last week was a good time to set that up on Wendy's.
Yeah, and then so you're getting that first leg of the position on now.
Exactly.
And how long are you waiting till you put on the second, or is that just a matter of if the stock goes up?
It's a matter of when the stock goes up and tops. Now, at a minimum, I want to get it up above the halfway point. So for instance, if I come back over here to say a 1-year chart and I kind of draw where the halfway mark is. So these little drawing tools that are part of all the charting packages out there. So there's not one charting package that's more popular than the other. But if I kind of draw support and resistance here. Once I get above about $44, I could go ahead and sell that call option, that premium, and buy some protective puts. But the more ideal time to do it is when it tops up. And it looks like it's been topping out around $48. So once it tops out, that's the real ideal time to sell premium and buy your protection. Basically, what we call it, setting up your trade zone, because then you could, once your trade zone's in place, you can set and forget this thing. The trade zone self-adjusts. So that's kind of the timeline on this position.
But that second option wouldn't be as far out as January 24, right? What would the time frame of that option look like?
That's exactly right. When we sell premium, we want to sell that 3 to 5 week. So it's only going to be for about a month. You want to sell that 3 to 5 week out option. And the protective option that you buy at exactly the same time, the one that's kind of like an insurance policy, that guy's going to be about 6 months out. So you're selling one that's 3 months out, you're buying one that's 6 months out, and then you're good to go. You let it ride.
All right. Well, that's a great setup for Wells Fargo. If anybody's looking to get in on a financial play, we did discuss a similar setup with Citigroup last week. So if you want to check that out, head on over to the YouTube channel. We should have that on there for you to see. Otherwise, if you got any tickers that you want AJ to review, throw it in the chat. We'll see if we have time to go over it. Otherwise, we're going to dig right into this week's specific names, starting off in the middle of America, Fort Wayne, Indiana. And this is Cindy, interested in InMode, ticker symbol INMD. I am not familiar with this one.
Yeah, InMode. I think that InMode, they deal in medical equipment, radio frequency equipment. I'm not sure if it's for plastic surgeons and cosmetic use or what, but they're in the medical hardware type business. Let me get rid of my exponential moving averages here so it's a little bit cleaner chart to look at. And let's go back. I'm looking. I always like to take a step back, and I find that short-term investors don't often do this, but you can get so much valuable history. So it looks like this $30 zone that we're bouncing up off of is a level of support that has been tested in the past. The question is we sure did loiter for a while up here at between 34 and 38. Question is will we get up there? But yes, I think that we are identifying a bottom that has been found. I'm going to zoom back in now and analyze the most recent price actions. So we got a signal right here last week, March 21st, that a bottom was found, but we really didn't get our volume validation until Wednesday. And it looks like today, I can see why you're asking about it. It looks like today we're getting follow through, and today might be either today or Monday might be a perfect time to be thinking about buying some of this stock. Let's look at the option chain. And let's see if it does look like there's some substitute options to be had. The bid-ask spread is a little bit on the large side, but it still could be done. Let's see, extrinsic versus mark. So that's, you might be thinking about this 15 or this $12.50 strike price. Maybe the $15 strike price is your substitute option. Definitely can be done. I don't know much about this company either besides what I read in the little paragraph summary. So I probably want to look at this company a little more. I don't see that they give out dividends, but I do see that they make money. So that's always a good sign when a company makes money. So yeah, I think that this is a good opportunity. I don't know if I'd buy it today or if I'd wait until Monday to see if it would be a good time to buy either the stock or the back month option. And then, yeah, when it gets up where maybe $38, maybe $36 to $38, I could sell some premium, buy some protection, and let her ride.
Yeah, looking at that chart, there is a lot of congestion there at that top level. I
Mm.
mean, that's like 6 months of like, I don't know, $4 moves, something like that. So definitely keep an eye on that.
Yeah, I think what's good about our strategy, SIP, is once you do sell that premium and buy that protective option, you could stop white knuckling it, right? You basically have these automatically adjusting thresholds that if the stock pops up or pops down, you don't have to take any actions. They self-adjust, they protect your investment. And I actually feel like you would want to not be prepared for a long time hold on in mode. In other words, you buy your in mode now, couple of weeks, you're going to sell those sell those premium options, buy those protective options, and then it may cross those thresholds and the position will self adjust. So just be prepared that this wouldn't be one of those positions you hold on to for a long time, but rather it might be one of those positions that cashes itself out, which is not a big deal either.
Yeah, and that's why we do the show, and that's why we take the questions, because some setups are better than others, and AJ is always honest of whether he likes it or he doesn't, and that's the value of tuning in. So thank you, Cindy, for bringing up In Mode. Let's keep the party going. We'll move on to our next ticker. This is Pete from Akron, Ohio, interested in the name that we've discussed many times, and that's Ruth Hospitality,
Ah.
ticker symbol RUTH, most notably known as Ruth's Steakhouse, right? I think that's what everyone knows them as.
We like Ruth. So we've been looking, as you can see here, I've drawn on this chart before. Again, we're looking at a 1-year chart, and you can see that Ruth has been beautifully going sideways for us, paying their stockholders dividends. And sure enough, you're absolutely right. We're at the bottom of our channel. We got a signal back on what was that, Tuesday? Not a valid signal, meaning I like my symbols to come along with nice volume validation. And just for those of you out there, volume validation is really easy to evaluate. You look at the volume chart and you throw yourself a 50-day volume average line. That's this yellow line that you see here. Let me make this nice and big so you can see what I'm talking about. This is the 50-day volume average. And when I look for volume validation of a signal, of a trade signal, I look for three things. I look for one, is my volume heavier than the previous day? So you look at the chart and you say, is this bar larger than this bar? The answer to that question was a big no. And then you say, well, is the volume heavier than the average? Is it above this yellow line? And so now we've got two strikes against us for volume validation. And the last thing that we would look at is, do we have building volume? So for instance, here's building volume, and you usually want to see building volume over at least 3 daily bars. If it's more, great. But this here is a perfect example of building volume. And over here, you've got 1, 2, 3, 4 bars that are above the average. They're all heavier than the previous day. This is a great day when you get signals during this kind of volume activity. You can really trust those signals. I call them valid signals. Whereas when the volume isn't there and you get a signal, you kind of say, well, without the volume being there, it means that that signal is being generated by just a few investors, and the rest of the investors on the sidelines could come in and totally reverse that signal. So maybe that's not the most valid signal. So even though we got this signal on Tuesday, I think we want to wait to see if it gets validated a little bit more before jumping in and buying stock. Or if you're in that point where you've actually shorted stock, you waited for Ruth to be at a high price, maybe about a month ago, a month ago, and now you're looking for an opportunity to sell put premium, I'd wait a little bit more. I'd wait for a strong, valid signal on this downside. And I don't see that just yet, but I'd be checking in every evening. So I'm really happy that you've identified this.
All right. We like Ruth. We like that
Mm-hmm.
people are keeping an eye on it and bringing it up. So definitely going to keep this one on my radar. I know that from a lot of the economic news that we've been seeing, hospitality is an industry that's been picking up. Maybe it's
Mm-hmm.
seasonal, but maybe it's just the post-COVID world where,
Mm-hmm.
these businesses are starting to ramp up. So definitely like the setup on this. So thank you, Pete, for bringing that one up. We
Thanks,
do have
Pete.
we do have 2 live questions that I don't know where we're going to go with these, but we might as well run through them. This is Luther, who interested in KMI.
Kinder Morgan. Kinder Morgan is a favorite by a lot of fundamentals investors. Let's zoom out a little bit. It's at a nice price, right? It's at that $17 price. It's forming that bottom. I'm going to zoom out a little bit further.
The comment with this question was it has a 6% dividend, which I don't know if that plays into your evaluation.
I mean, here's the scoop. When a company gives a dividend to its shareholders, the shareholders are often quite happy with that payback for owning the stock. And so they don't go to the shareholder meetings and bang on the management staff's, door, the president and all the CEO and all those people saying, what are you going to do to make the stock price go up? Because these investors are totally happy that the company is paying them a dividend. They're making enough money by owning the stock share that way that they don't need to see the stock price go up. They're not owning the stock because they expect to get a better price when they sell it in the future. They're owning it to make their own form of income off of the actual dividend. So that's nice for us because we can we could do a whole bunch of things. We could own the stock as well and collect dividend, but we could also put our trade zones on there every month or every time it cycles from low to high and collect a premium that way. We call it our instant dividend. It's not an official dividend like the dividend that Luther's mentioning, but it is a premium, right? We get to collect an income off of it using an option strategy. And I think Luther's pointing out that, hey, it's at a bottom. It's definitely been trending. This is a 2-year chart, and it's been trending for the last 2 years. I'm going to zoom back into, let's look at a 6-month chart. I agree. So we got a signal back here. This was on March 21st. Let me zoom in even further. And I think my support and resistance lines, in fact, I'm going to go ahead and delete them because I don't think they're accurate. When I was looking at the 2-year chart, I think support and resistance support is a little bit lower than what I had drawn. So those aren't even valid. That's why I deleted them. Let's just look at the signal. I actually think, it's definitely tapping up a little bit by little bit. Let's look over here. Again, I'm looking for that volume validation. I wonder if this bar was our volume validation. We wouldn't, we should be looking for an opportunity in order to get in. And I think we're almost exhausting that. I think that if you didn't get in probably about 4, at the beginning of this week, I think you're getting towards the end of this current run. However, maybe look on Monday. There might be one last ditch opportunity to get in order to buy the stock. And in this case, because of that dividend, this would be one of those stocks that I would want to have in my portfolio. So I wouldn't buy the back month option. I'd actually go and buy this stock so that I could also take part in the dividend that comes out quarterly. And then I'd also be selling premium. This is one of those stocks that I would want to have in my portfolio for the long term. And it should be on your watch list. I love it. Good one for Luther.
Yeah, it's probably a good diversification play because they're such a household name product. They have
Yeah.
a solid business. They're not so impacted by the day-to-day fluctuations. So I agree. So thank you, Luther. Let's jump into another live question. This is James, interested in HST.
Oh yeah, Host Hotels. We featured this a couple of weeks ago. And I've been watching Host Hotels for a long time, especially since we featured it. And it takes a little bit for me to come around, but I've been bummed about the lack of liquidity. So it shows a lot, and this goes to show a lot of people ask me, how do I evaluate liquidity? Because a lot of people just look at this open interest column and they see a lot of shares in the open interest, or I should say contracts in the open interest column, and they feel like that's the best measure. And what I teach my folks to do is basically focus heavily on the bid ask spread. That's the gold standard. Seeing how far apart these two numbers are. If they're very far apart, it means that there's not that much activity. There's not much liquidity. If they're very close together, then fear not, this is a good symbol because you'll have no problem buying and selling options. So my problem with Host over the last months that I have been watching it is that the liquidity has gotten me into some trouble, or the lack thereof of liquidity. So I just want to warn you on that Host is been giving me like agita from not being able to buy and sell at the prices I want to, because there's just not a healthy marketplace. With that said, damn, they formed a bottom recently. And so if you wanted to do some premium trades on Host, now's the time to be buying the back month option, or buying the stock itself. It's cheap enough, and setting yourself up in order to sell that premium when you're at the top of this channel. So your timing is spot on. Just watch out for the fact that I don't want you to fall into the same trap that I have been, which is that there's some issues with liquidity.
Yeah, so it's good to see that some of the old names we've discussed are coming up. That means that people are taking our advice and putting on positions. So thank you,
Yep.
James. Let's move on to our last user pick of the week, and this is Casper, the friendly ghost. No, the city. This is Alex from Casper, Wyoming, interested in a metals play, the uranium ETF, ticker symbol URA. What's going on with uranium, AJ?
I mean, I was just, because I'm interested in the whole nuclear world. That's my engineering side. I like to pay attention to the latest activities in the whole fission world, as well as kind of the burgeoning fusion world. And so, there's more money being invested right now into nuclear research than since the 1960s. So with that said, I mean, take a look at the uranium ETF, and I could probably understand Casper is like the mecca of natural gas. They've got some good natural gas wells there. And so, but I also know Wyoming, Colorado, you guys also have some uranium mines that probably are becoming active again. So I can see why Alex is interested in this. It looks like, when we look at this chart, that the uranium ETF is basically sideways channeling. I would think that it would be on a rise here, but it's not. It's sideways channeling, and Alex pointed out a double bottom here from the technicals perspective. So let's take a look. Yeah, I mean, you got a signal back here. It wasn't the most valid signal. We really haven't gotten validity on this double bottom yet, so I would be a little bit apprehensive on taking any action today. Let's look again at that option chain. Make sure that there's some activity. Yeah. And here's the gold standard. Bid-ask spread. There's a 20-cent difference. Over here, there's a 15-cent difference. Over here, there's a 10-cent difference. Here's a 15-cent difference. That's okay. I can deal with this 15-cent bid-ask spread. I see a little bit of activity in the open interest. So, I'm all good with doing a trade on this uranium ETF, and I think that your timing is on. I'm seeing this double bottom peter out here, and that's because we don't have volume validation. So I guess the theme of today is make sure when you see a trade signal that there's volume validation behind it, because otherwise, just think in your head that trade signal is being generated by a few investors, and the rest of the investors that have a stake in this particular symbol are sitting on the sidelines. So, should they jump in and start doing something, it could totally reverse your signal. So, only trust signals where everybody's got a consensus on that direction.
Yeah, and I'm curious if that's an overall theme across the market as well, right? With this recent rally, are we getting the volume follow through? Because if we're propping it up, then the answer is no. And, we got to look for these opportunities for when that propping kind of exhausts itself.
Absolutely. I think that you totally got the your observation is correct. I think there's a lot of trepidation, and so the market is moving, but it's just a few kind of excited folks, and the rest of the people are sitting by like, we'll see if this. But should the momentum continue, a lot of this, like people waiting, will slowly but surely jump in.
And fortunately for us and the members at Trading Trainer, it really doesn't matter to us whether a market goes up or down or
No.
sideways. We've got strategies to take advantage of all of that. And with that being said, we're heading into Q2. We're heading into April. I believe that the one-on-one coaching is starting to pick back up. And so if anybody's interested in getting a little bit more hands-on training with AJ and his team, he's got an amazing program, the one-on-one trading, the Trading Trainer one-on-one coaching. So if that's something that you're interested in, if you're looking for a little bit more guidance, head on over to the link that we just threw into the chat. Schedule an appointment. I guarantee you it won't be a hassle. You're not going to get hard sold. It's not going to be one of those experiences. You're really going to be educated on the potential, the information that comes with it, and an option for you to become a member or not, right? It's just another way to advance your education. And so if you're retired or you have a nice retirement account and you don't really know what to do and you want to get a little bit more hands-on, then this might be the perfect thing for you. AJ, how's any follow-ups on the one-on-ones? How's everything looking over there?
I mean, we are booked up right now, but we do have some openings appearing in April. So I think that we have some ability to help people, and the people who are moving. So our one-on-one program here's how it's structured, Sip. The first part of the program is where we work with you one-on-one, not only to do kind of a knowledge transfer, make sure you've got premium selling down pat in your mind, but also to prepare you. We make sure you've got your watch list. We make sure you have all your trade plans on your watch list in place, and make sure that you're checking in with them between every trading session, knowing exactly the steps you have to take. The second part of our coaching is after you're all set up, we actually take 6 months and we trade with you. You trade with all the other coaching members and us. You get to see what we're trading. We get to see what you're trading. And we give you like feedback. We basically handhold you through 6 months of process. So we have a whole bunch of people graduating from this one-on-one kind of knowledge transfer setup portion into the trade with us. And so that's why in April, we've got some openings for new folks to start the one-on-one piece, the phase A.
Yeah, and I feel like whenever we promote this, the demand skyrockets, and we're always in that place where we're like, "Oh man, well, when another space opens up, maybe we'll let you in." So
Yeah.
it's good to see that there's a lot of interest there. It's good to see that people are coming in for that extra coaching.
A lot of
One
success. I can't believe, it's almost like it's the market's dirty little secret. Options confuse so many people out there, and they're like, I don't know how to use options. Aren't they risky? Things like that. But we show people how to use options in a way that's not risky. In fact, it's the opposite. It hedges against risk, and it guarantees you like these income checks every third Friday of the month or when options expire. And so by showing people these little tricks and then trading with them so they build experiences actually in real time using this stuff, I mean, we've been seeing so much success with our coaching clients. It's awesome.
Yeah, and here's the facts, guys. AJ's not one of these TikTok teens that's going to be giving you, his P&Ls for the day. He's been doing this with Trading Trainer, with professionals, with adults, maybe a few kids every now and then, right? Because I know that we've got some really intelligent viewers, successfully for 20 years. And so that's what comes with Trading Trainer. That's what you get when you work with AJ. And so the links are in the chat. So everybody head on over there, check it out, sign up, get some more information. Otherwise, I feel like we're getting, close to our time limit here, AJ. We're closing out Q1, heading into a brand new month of April next week. What are your thoughts? How should we as investors be looking at the market, positioning ourselves, or should we just shut everything down, enjoy the weekend, and get back on Monday and see what the storyline is?
Well, the scoop is options expire on the third Friday of every month, and this April doesn't start until tomorrow, Saturday. And so we've got a whole bunch of time. We still have 3 more Fridays in April to be looking for our premium opportunities. So I think it's actually a good weekend if you've got like an hour or two of bandwidth on Saturday and Sunday to be looking for these opportunities like we featured today, and bring them to next Friday's show. I'll tell you exactly what I think of them. I'm glad that folks brought in all the tickers that they brought in this week in our speed round. But yeah, I think that if you've got time to look at some charts, find some of these charts that look like they'd be opportunities for premium selling, and then double check them with us on our show.
That's right. All right. Well, that's going to be the plan for everyone heading into the weekend. AJ, thank you for your time today. Folks, thank you for tuning in. If you're new to the show, the broadcast, and if you've enjoyed it, hit that like, hit that follow, hit that subscribe button. If you have questions, feel free to drop it in the comments, send us a DM, and someone will get back to you. And with that, that's all we got, folks.
Take care, everybody.
We'll see you next week.
All right.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.